Here's the bottom line. When it comes to Tesla, the doubters were wrong and the believers were right.
This is the mother of all short squeezes, and here we are.
And Tesla CEO Elon Musk taking yet another victory lap dance today. No, I didn't mean it like that. Not a lap dance.
Previously, Tesla unveiled their plans to mass produce the 4680 battery cell with the intention of building 20 million EVs per year by 2030. In the year 2020, Tesla had the goal to deliver 500,000 vehicles. Initially, this seemed to be a cakewalk. However, due to both the Fremont factory and the Shanghai Gigafactory being shut down for periods due to the pandemic, this target was now in doubt. As through Q1 and 2, Tesla had only delivered 179,000 vehicles, meaning that they still had to deliver 320,000 in Q3 and Q4 to meet their target. And to put that number into perspective, they're going to need to deliver as many vehicles in 6 months than they had to deliver in all of 2019. On October the 2nd, Tesla reported Q3 deliveries.
The third quarter Tesla top delivery estimates delivering 139,300 vehicles. That is a record quarterly delivery rate for Tesla. The estimate was for 136,350. So again, Tesla topping Q3 delivery estimates.
So another record quarter for deliveries. But if Tesla's going to achieve their goal to deliver 500,000 vehicles in 2020, they're going to need to deliver over 181,000 vehicles in Q4. And to the astonishment of many following Tesla, Elon Musk doubled down and reiterated Tesla's expectations to hit the 500,000 mark.
So Tesla says we have the capacity installed to produce and deliver 500,000 vehicles this year. While achieving this goal has become more difficult, delivering 500,000 vehicles in 2020 remains our target. I think analysts across the street saw that as being a bit of a heavy lift for Tesla going into the fourth quarter. They will have to deliver 180,000.
So while the focus was on the delivery numbers in Q3, Tesla also posted an all-time high record of $8.7 billion in revenue, along with 5 consecutive GAAP profitable quarters. So with all the criteria met, when will Tesla finally gain entry into the S&P 500 index?
The S&P finally opening its hallowed doors to Elon Musk's creation. The EV giant will gain entrance to the S&P 500 on Monday, December 21st, sending the stock and his net worth sky high.
The news of the S&P 500 inclusion pushed Tesla stock from $450 to an all-time high of $550.
It's a victory dance. A Silicon Valley innovator reaching new heights with Tesla's market value crossing $500 billion.
The ever-increasing stock price also pushed Elon Musk up the list of the most wealthy individuals on the planet.
As for Elon Musk, his net worth has risen more than $100 billion this year. 3/4 of his wealth does come from Tesla. The stock has rallied over 400% this year. He still trails, as you mentioned, Amazon CEO Jeff Bezos for the top spot. But at this point, anything is possible considering what has happened to this stock and for this man, Elon Musk. And we'll see where he goes next year. Back to you.
Yep, he's one of those, if you can dream it, you can do it, and he is doing it. Cheryl, I remember when they were thrilled to get 24,000 deliveries per quarter. Mm-hmm. Now it's 500,000 for the year. Unbelievable. Yeah. We'll be watching for that number.
With the stock price booming, Tesla took advantage of the situation once again.
All right, everyone's favorite stock, Tesla. Wow. Shares up more than 600% this year to date. And right now, Tesla going to take advantage of that share surge by going back to the capital markets for the third time in 10 months, raising as much as $5 billion of common stock. I guess this isn't surprising. I mean, given the share run up, it kind of makes sense that they would take advantage of this. I am curious as to where we stand right now with Tesla's cash stockpile. Like, how flush are they at the moment?
Yeah, so as of September, there was around sort of this 12 and 14 billion cash on hand. You know, if you look at what they could raise, it could take them to nearly $20 billion. much greater than most S&P 500 companies. And if you read across Wall Street what the analyst notes are saying today, this was a prudent move, as you say. The run-up in the share price makes the cost of capital for Tesla very attractive. But they also have an incredibly large to-do list. There are a lot of projects all around the world, a new factory in Europe, a new factory in Austin, Texas, an expansion of the factory in Shanghai. And it was long a criticism of Tesla, right, from Wall Street. When are they going to deploy the capital needed to grow? When are those capex numbers going to come up? And so, reading today, this has been greeted positively and really sets them up for all of the projects that they have to do in 2021.
So while Tesla enormously strengthened their balance sheet, the bears still weren't convinced.
And I mean, I was going to say that all of this you're pointing out here, as we look to that inclusion on Friday, certainly the announcement was a big catalyst for the stock. You say that you're very bearish on it right now. We're looking at Tesla's trading at $635 a share, roughly. Where do you think fair value is?
I think fair value for Tesla is probably around 60 to 80 bucks. We think it's going to head there. We think it happens next year. We think
60 to 80
competition is going to be a
bucks.
problem. Want to talk? No, go ahead. I'm sorry.
Did you say 60 to 80 bucks?
Correct.
So will Tesla stock fall to $60 to $80 in 2021? I guess we'll just have to wait and see. And on the topic, just how much have the Tesla short sellers lost in 2020? Spoiler alert, more than the entire US airline industry during a global pandemic.
This is the mother of all short squeezes, and here we are.
Yeah, exactly. But there were clusters of shorts around certain places, which obviously took the outstanding shorts down from 130 billion shares to 50, and now, as you say, maybe 30-something thousand. But in comparison to the next three biggest companies with the most shorts outstanding, it's still more than all three combined, Bob. What do you do if you're a short seller of Tesla now? Do you continue to wait?
Well, what we've seen actually in the last month is something interesting. Even though this has probably been the single largest negative bet for short sellers, meaning they've lost the most money ever, we still see people initiating new shorts as the S&P inclusion happens. So, there is still a school of thought that this is a bubble that Elon Musk created, and we're going to short that bubble. Eventually, things mean revert. The company has to make money other than credits, and you still see people willing to play that bet.
Also in December, we find out about one of the biggest missed opportunities in corporate history.
Tesla could have been part of Apple by now. Founder Elon Musk says he once tried to sell his car firm to the Silicon Valley giant, and it could have been a bargain with an asking price a tenth of its current value. But he says Apple chief Tim Cook refused to take a meeting. Musk claims the attempted sale came during the darkest days of the firm's Model 3 development. Back in 2017 and 2018, Tesla was struggling to ramp up output of the mid-priced sedan. At the time, Musk said it was in production hell. However, Tesla overcame the troubles and has since racked up a series of quarterly profits. There was no comment on Musk's claims from Apple, but if true, the iPhone maker might now be rueing its decision. Reuters this week reported that it's looking to produce an electric vehicle by 2024 using a new battery technology. Buying Tesla might have been a cheaper way to do it. Musk has also cast doubt on claims made about Apple's new batteries. In a tweet, he says the so-called monocell system wouldn't be able to produce anywhere near enough power.
So while Apple potentially squanders the deal of the century, Tesla stock finally makes its debut into the S&P 500 index.
To your point about Tesla, Jim, it's now 1.6% of the S&P. 150 billion changes hands on Friday.
In terms of Tesla, I think that a lot of good things happen with Tesla, Carl. Maybe Phil has a contrary view or knows more than I do.
In response to what Jim was saying in terms of, with Tesla and whether there are good things coming, there's no shortage of people out there who believe that there are a number of catalysts in the future when it comes to Tesla. Look at their annual sales. But I do find this interesting. We asked the data team, how volatile has Tesla's stock been in the last year in terms of its daily volatility, the price change, relative to everybody else in the S&P 500? Look at this. Far more volatile. 5.69%. In fact, there's only 20 stocks in the S&P 500 that were more volatile than Tesla. The average volatility, 3.37%.
And to conclude the year, Tesla reported Q4 deliveries, with the big question being, can Tesla do the impossible and deliver 500,000 vehicles in the calendar year?
Meantime, Tesla out with Q4 delivery numbers, putting the company just shy of Elon Musk's goal of 500,000 vehicles sold in 2020. I want to get over to Phil LeBeau, who joins us with that story over the weekend. Phil.
When you take a look at Tesla's total sales for all of 2020, yes, technically, did they not hit their target of 500,000 vehicles? Yes, but they only fell 450 vehicles short, coming in at 499,550 vehicles delivered last year, essentially 500,000. And again, just 450 vehicles short of the sales guidance. In terms of the fourth quarters, it was really about Model 3 and Model Y. And mainly when you're looking at that, 90% of those sales, Model 3, Model Y, the vast majority of those being Model 3. By the way, this was a record quarter for deliveries for Tesla. Elon Musk tweeting out, so proud of the Tesla team for achieving this milestone. At the start of Tesla, I thought we had optimistically a 10% chance of surviving at all. Well, they've not only survived, they have thrived. Take a look at shares of Tesla, now trading at an all-time high, indicating being up, to $721 a share this morning pre-market.
And for those claiming that Elon can't hit deadlines, here's a reminder of what Elon said back in 2014.
What can we eventually expect when it comes to ramping up with the Gigafactory in place, the number of Teslas that you push off the assembly line?
Well, I feel comfortable that we'll be able to achieve at least 500,000 cars a year by 2020. Maybe we can do a bit sooner than that, but I think that's what I feel comfortable predicting.
500,000 cars by 2020.
Per year, yeah.
That is pretty interesting and impressive. I hadn't heard that number.
And with that incredible achievement, it's time to recap another action-packed year.
2020 was a defining year for us on many levels. Despite a challenging environment, we reached an important milestone of producing and delivering 500,000 cars. I'd just like to once again thank the people of Tesla for an incredible effort. We delivered almost as many cars last year as we produced in our entire history. Regarding capacity expansion, we started producing the Model Y out of Fremont and have almost reached full production speed. We ramped the Model 3 in Shanghai to more than 5,000 cars a week sustainably, and Shanghai continues to grow rapidly. We introduced the heat pump to all of our vehicles. We ramped to volume the single-piece castings for Model Y. This is where, for the first time in history, the entire rear third skeleton of a car is being cast as a single piece in the largest and most advanced casting machine ever made. We built the Model Y factory in China from start to finish in 1 year. We're also building Giga Berlin and Giga Texas. And lastly, we built a battery cell factory in the Bay Area. Even though it is a pilot plant, its capacity is large enough that it would be in probably the top 10 battery cell factories on Earth, despite being a pilot plant.
And just to add, they unveiled the 4680 battery cell, which they hope will enable them to produce 20 million vehicles per year by 2030. They weathered a global pandemic and multiple factory shutdowns to finish the year with growing revenue and 5 profitable quarters, which earned them entry into the S&P 500, while the stock was up 750% for the year, and in the process steamrolling all Tesla short sellers to the tune of $39 billion.
Here's the bottom line. When it comes to Tesla, the doubters were wrong and the believers were right. Those believers are not the rich, cautious state preachers of index fund handcuffs. They're the individual investors who are sick and tired of being told that they're stupid, too stupid to manage their own money. Turns out they can make a lot of money when you buy stock in a great company with a visionary CEO and a revolutionary product. That shouldn't take so many people by surprise, and I hope it doesn't after the shimmering star that is Elon Musk's Tesla.
In 2021, Elon Musk and Tesla will once again battle fear, uncertainty and doubt that the haters and skeptics throw their way, and the story continues in the next episode. If you enjoyed the episode and want to help the channel, Patreon is the best way to do so. And as always, all content is for educational and entertainment purposes and not financial advice. So till next time, I'll catch you guys soon.